Good morning. You are watching live daily market outlook for Tuesday, 24th of April 2012, prepared by Windsor Brokers. The Eurozone crisis remains the main focus today, especially after yesterday's release of Eurozone's business data showing that zone's business slump deepened at a far faster pace than expected in April, and suggesting the economy will stay in recession at least until the second half of the year. The release of yesterday's PMI that fell to 47.9 from 49.2 in March, a 5-month low, and confounding the forecast for a rise to 49.3. Optimism from this weekend's deal to boost the International Monetary Fund's crisis fighting firepower quickly evaporated, and worried investors sold the euro and both safe haven German and the U.S. government bonds. Euro, as immediate result of this release yesterday, dipped to 131 zone where the temporary support was found, and basically after overnight's very quiet and very narrow range sideways movement, this morning some action was seen as the pair regained the next barrier at 131.70-80 zone. The sterling holds its near-term consolidation around just under 161.42 previous high, with recent action after European opening seeing a fresh attempt at this level, despite some negative tone on the short-term studies. It seems that the sterling is heading again higher. We need to see the break here to open the next very significant barrier at 161.64. More of this in details. We'll have it in our technical part. Dollar yen remains under pressure as it yesterday's loss of 81 handle so far tested 80.85 and keeping the downside the focus. Similar with the dollar Swiss that remains capped by main bear trend line. From the night, from the Asian Pacific session, another important release was Australian inflation that rose by far less than expected in last quarter, while underlying inflation was the slowest in over a decade. And this might be clearing the way for a cut in interest rates next week, and knocking the local dollar. The Aussie dollar fell a third of a cent, and the bond yields also hit 60-year lows, as the outlook for a lower inflation fueled the speculations the Reserve Bank of Australia had scope to ease not just once but perhaps several times. Just a reminder that inflation came at 0.1%. Compared to the forecast of 0.8%. So we're going to take a look now on today's calendar too. As said, the quarterly CPI came in unexpectedly low at 0.1. 0.8 was the forecast for today. Also from China, CB leading index came at 0.8%, the same like previous release, while the Swiss trade surplus narrowed more than expected in March. 1.99 billion Swiss francs was the forecast for today, while the surplus showed only 1.69 billion Swiss francs, narrowing the trading surplus of the Switzerland. As the result said, came below the market expectations. Still to come at 8:30 GMT is the UK's public sector net borrowing that is expected to go up to 15.6 billion pounds compared to 12.9 billion pounds of the February's release. And that would be all today from the European part. Americas are starting with the Canadian retail sales due at 12:30 GMT, decrease by 0.2% is forecasted for today compared to previous release of January that grew by 0.5%. Core retail sales are expected to improve by 0.8% compared to minus 0.5% drop in the January's reading. US, this was from Canada, from US at 1300 GMT. CB composite 20 metro areas home price index on yearly basis for February is expected to slightly improve despite being in the negative field. Minus 3.5% is today's forecast compared to minus 3.8 of January's release. And the US CB consumer confidence due at 1400 GMT is expected slightly to decrease 70.1 compared to 70.2 of the previous month. US new home sales at the same time for March are expected to go up to 321,000 units compared to 313,000 units of the previous release from February. And US home price index monthly for February is expected to improve to by 0.1% compared to unchanged the previous release. And finally, at 1400 GMT again, Richmond manufacturing index for April, no change expected. 7% is the consensus for today compared to 7% of the March release. And the Bank of Canada Governor Carney is due to have speech at 14:30 GMT. And that would be all from today's calendar. Now we're going to take a look at majors and commodities and see the latest movements in the markets. As said, the euros yesterday's dip of last Friday's peak at 132.23 found a good support at 131.03, and subsequent bounce higher was initially the pair initially regained the previous support, then reverted to resistance at 131.40-50 zone, where it traded during the Asian Pacific session. European opening sees some action higher, with the slight improvement in the hourly studies still keeping potentials for a further extension higher. We need to see the regain of minimum 132.00 in order to confirm the higher low at 131.03 and open next our key near-term barrier at 132.23, last Friday's peak. On the 4-hour chart, studies are still holding a positive structure as the pair's price holds above 131.50, where is the 20 days exponential moving average, and the broader up move from 129.93 last week's low still stays in play. Potentially seen of a regain of 132.23 that will open way for a further extension, further retracement of the latest decline of 133.80 zone, beginning of April peaks, with 132.32 immediate target, 61.8% Fibonacci retracement of the entire down move seen on a break above 132.23, with this zone 133.30-40 offering a next significant barriers. Back to the hourly studies, the immediate support is overnight's low at 131.40 zone, and the loss of this level would be risky for a possible return back to initially 131.00, and then the next supports at 130.68 and 130.56 ahead of our key support, and the larger picture key support zone at 130.00 that marks the past 2.5 months range floor, as well as 129.50 Fibonacci level. So we have quite strong support at 130.00, 129.50. Just to say that negative tone still dominates in the daily chart. The studies are still holding below their midlines, and as we can see, the price is trapped between 90 and 55 days moving average on the downside. 90 days MA is currently standing at 131.13, where 55 days one is on the upside at 132.03, and basically break of either side. It's rather sideways, the recent price action, and the larger picture of the beginning of February 2012 still sees the range trading of euro with the downside support at approximately 130 zone, and the upside 134.85, a peak of 24th of February 2012. Cable is attempting again at its last Friday's peak at 161.42 with the recent action this morning briefly breaking above 161.46 seen so far. Positive structural studies pointing up on the hourly chart still see potential for a break here. However, quite extended situation of indicators on the 4-hour chart still sees a risk of a possible reversal as RSI is holding around the barrier of the overbought zone, and the other studies are already hit their extreme points and now started pointing lower. That sees risk of corrective action, deeper corrective action. Immediate support is 60.75. Yesterday's low just ahead of this is 60.87, the 20 days exponential moving average, and the 60.61 previous peak of 2nd of April 2012. It also marks around 23.6% Fibonacci retracement of the latest uplift from 158.17 to 161.42. On the upside, immediate target and strong resistance lies at 161.64, peak of 31st of October 2011, as well as 61.8% Fibonacci retracement of the longer term descent from 167.45, peak of 2011, to 152.33, low of 2012. And this zone is expected to offer quite strong resistance, and most likely will not be cleared at initial attempts. Structure on the daily chart is still positive. All the studies are in the positive territory and pointing higher, and they see potential of retest of this barriers. Initially 161.42, that needs to be clearly broken, and then a more significant 161.45. The dollar yen remains at the back foot after a recovery attempt of 80.28 last week's low, run out of steam at 81.77, just ahead of a main bear trend line of 84.08 through 83.30 peak, and subsequent reversal. Two-legged one hit initially 18.96, followed by a brief consolidation seen overnight that was capped at 81.18, and this morning's fresh weakness hit 81.85, exactly 61.8% Fibonacci retracement of 80.28 to 81.77 ascent, with the negative tone dominating on the near-term studies and still keeping the downside in focus. Currently, the pair is in the near-term corrective action, attempting at 81.00 as initial barrier, just ahead of 81.07 20 days moving average, and a more significant overnight high at 81.18, where is hourly 55 days moving average, and basically a break above this level would provide the near-term relief and open way for some stronger corrective action, but is seen as corrective as long as first trend line resistance that currently stands at 81.60 and the previous peak at 81.77 staying intact. Only break above these two levels would allow for a stronger, for the extension of the recovery attempt from 80.28, and will confirm the higher low. Otherwise, likely scenario would be further extension lower, with the 80.57 seen as interim support ahead of our key near-term support at 80.28, low of 16th of April 2012, loss of which would open way for the extension of the corrective pullback of yearly high at 84.17 posted on 15th of March, with immediate targets at 80.09, 50% retracement, 80.00 round figure support, and 28th of February low. Ahead of post-intervention 31st of October 2011 peak at 79.52. That will come in focus in case of loss of 80.28. As said, on the upside, only break above trend line and a high of last Friday at 81.77 would provide a temporary relief. The dollar Swiss continues to trend lower of its last week's high at 92.50, with yesterday's false break above the main bear trend line that extended gains to 91.70, being short-lived as the pair's price quickly reversed under the trend line. With the fresh action seen this morning, overnight price action was moving within the narrow range and in sideways mode, with the fresh bears emerging this morning, hitting a 91.14 low so far, just ahead of our 90.90 and the 90.84 downside targets lows of 12 and 20th of April 2012. A negative tone still dominates on the lower time frames, as hourly studies are losing traction, with price still holding below the moving averages of 20 and 55 days, with the 20 days one attempting to break below the slower one. That will confirm the negative near-term structure and possibly open way for a retest of our key near-term supports at 90.90 and 90.84. For now, immediate barrier is 91.37, the trend line resistance, ahead of 91.40. Overnight's high that offers initial resistance. However, only break above yesterday's high at 91.70 would avert immediate downside risk and allow for a stronger correction of 90.84 last Friday's low, with the 92.00 and then 92.00. And basically 92.00 comes next, as we have 91.87, 61.8 retracement, 91.94 a peak of 19th of April, and the 92.08 peak of 18th of April 2012 as a stronger resistance zone, and basically only firm break above 92 barrier would refocus a previous high at 92.50. On the downside, the key support has set 90.90 and 90.84, loss of which would signal further extension of the pullback from 92.50 and likely open way towards 90.00 base and a very strong support low of 2nd of April 2012, and another significant one at 89.30, double bottom of end of February 2012. A quick look on gold also. A negative tone is still pushing the yellow metals price higher, with the yesterday's low seen at 16.23, just ahead of our key short-term low at 16.12 posted on 4th of April. Studies on the hourly and the 4-hour chart are still negative. However, some regain of momentum is seen on the hourlies, as this morning's action of 16.34 is now bouncing higher, with immediate barrier seen on yesterday's intraday high at 16.39. What is also close to it is the 55 days moving average, and break here is to allow for some stronger recovery. However, the general downtrend remains well protected as long as the main bear trend line, currently at 16.66, and the previous peak of 13th of April at 16.86 stay intact, with immediate focus at 16.12 low of 16.12 low of 4th of April 2012. More significant targets are seen on the 15 32 and 1522 double bottom of 2011. As seen on the weekly chart, the gold is now attempting to break below the larger and longer term triangle support at currently at 1641. There is already a break, but losses needs to hold below this important support in order to confirm the negative structure, as the broader negative structure of record high of gold from 1920 of 2011 continues to push the price higher, with the key support on the downside set a 1600 zone, and then the most important one, 1532, 1522 double bottom. That would be all for today. We're back tomorrow morning at the same time, 7:00 GMT. Have a nice day.